Good morning, ladies and gentlemen. Welcome to Market Today on Business Today Television, your premier show to understand what's happening in equities. It's been a painful week. We've had the Nifty correcting very sharply over the last 4 trading sessions, which also included an holiday on Wednesday. The index at 25,250 has lost about 1,000 points since it hit a record high about 5 sessions ago, and from then on you've seen yesterday the market correction being at about 550 points. On the Bank Nifty, the pain is equally bad, if not more. Yesterday the index shed 1,077 points at 51,845, and in the past 4 sessions about 2,700 points have been taken back in the market after what was a fantastic 3-4 week rally in which the index itself, both the Nifty and the Bank Nifty, had surged about 9%. Now let us analyze the market in a little detail. We are likely to see further falls today. The reason is very simple: crude oil prices. I'll request the PCR to fire the daily chart of crude oil futures right there in front of you. Crude oil futures have accelerated to a 1-month high. The price that you see, $77 a barrel, was last seen on September 3rd, and it's the crisis in the Middle East in which on Tuesday night you had Iran firing about 180 ballistic missiles towards Israel. Thankfully there weren't any casualties that were reported, but it's those tensions that have escalated dramatically, and now there is talk of actually chatter between Israel and the US to discuss hitting Iran's oil facilities in response to the ballistic missile attack. That essentially means that crude oil prices will continue to firm up further. They are already 8% higher in this week, and that is the reason why you see the Indian equity rally wobbling so sharply. Remember, we import about 80 to 85% of our crude oil requirements, and any bump up in crude oil prices hurts the macro balance sheet to some extent. Therefore, you see the pain that has coming into Indian equities over the last 4 trading sessions. Now look at the foreign institutional number. Remember, all through yesterday I was telling out that this number will be the most critical, and it has come out. 15,400 crores worth of net sales were pressed by foreign institutional investors in Indian equities yesterday. Over the last 4 sessions, in which you have 1,000-point correction on the Nifty, FII net sales have totaled more than 30,000 crore rupees. So that has hit sentiment on Dalal Strait to a very large extent. Rising crude oil prices, Middle East tensions, selling by FIIs, and of course the SEBI circular, all put together have put the bulls on the Dalal Strait on a very weak footing, and that's visible in the way the markets have corrected. Nifty, I'll bring back the chart to you, is now below 21 EMA. There are signs that it will open 50 points lower, and the most immediate support that you see is somewhere like 25,000, which is the 50-day moving average. The Bank Nifty is already below the 50-day moving average and is now headed towards the 100-day moving average. So you can see the pain point that is there in the market because of delivery based selling, basket selling that the foreign institutional investors have now pressed. What ahead? Well, we will be looking at counters like HPCL, BPCL, Indian Oil Corporation. These are oil marketing companies. Any spike in oil prices is detrimental to these OMCs. Yesterday, the top loser in the F&O space was Hind Petro, down about 7%. These losses are likely to continue. Also keep an eye out on BPCL and IOC. Separately, paint companies such as Asian Paints, which were heading towards record high, Kansai Nerolac, Berger Paints, Akzo Nobel, and of course Kansai Nerolac will be also under pressure because their raw material prices are determined by how crude oil prices move. So any uptick in crude, and it's been a substantial 8 percentage point uptick so far in the week, will also hurt intermediate sentiment on these paint stocks. What will benefit is of course oil majors such as ONGC and Oil India. They've been languishing for a very long time, and a rise in crude oil prices is beneficial to both these countries. So keep an eye out on these. Now, where is the maximum profit booking happening? Ladies and gentlemen, the auto space. It had gone up very sharply in the month of September. Remember, the top two gainers on the Nifty were actually Bajaj Auto and Hero Motors. Now that monthly volume sales for the month of September are out, there isn't much to talk about till the point we reach October end. You will see profit booking happening in all auto counters, probably led by Tata Motors, Maruti, Bajaj Auto, and of course Hero Motors. What will be an exception, of course, will be Mahindra and Mahindra. Strong brokerage reports coming in. Mahindra and Mahindra will also open the bookings for its much appreciated and much publicized SUV Thar Rocks. So that is something that the market is looking forward to. So keep an eye out on this counter. All told, in the last session, which was Thursday, and also the weekly expiry of the Nifty, overall 9 lakh crores worth of market capitalization has been taken away by the bears from Dalal Street. So this is the selling pressure that is coming in, but you needn't panic. This probably could be an opportunity to get back into the market at a lower level. How to do that, we will continue to elaborate on that in the following shows. And this is a time when you don't need to lose your sanity, and of course not to commit that sin of stopping your systematic investment plan. So please continue with that, and we will keep an eye out on how work will happen from now on. Let's look at the schedule for today. We have two major guests coming in. Mayuresh Joshi, Director for Research at William O'Neill, a fantastic stock picker that has who has given us a lot of quality stocks, and of course Mitesh Panchal, who will be looking at the technical part of the market. If you remember, Mitesh was with us somewhere last week, and he had said that he's just observing the market, remaining on the sidelines. It looks overheated, it looks overstretched, and that has proved to be absolutely true. So this is, ladies and gentlemen, the background of how equities have moved over the last 4 days and created a lot of pain for people who have recently entered the market. Remember, the monthly expiry is young as far as October is concerned, but the pain point in the F&O space is the SEBI circular, which mandated that exchanges reduce the number of their weekly expiry. So the Bombay Stock Exchange has come out with a proposal that the planned launch of the Sensex 50 weekly expiry has been put on hold. They have two indices which expire in the futures market on a weekly basis. One is the Sensex, the other is the Bankex. So the Bankex expiry will be pulled out. The National Stock Exchange has 4 weekly index contracts: Nifty, Bank Nifty, Fin Nifty, and of course the Nifty Midcap Select. 3 of them will go away, and my understanding is that the Nifty contract will remain. So those were also the pain points that were experienced by the market in the last 2 or 3 trading sessions, and that's the reason why you see this very sharp rise in volatility. I'll request the PCR to fire the India VIX chart, which is the fear index in the market. Look at how it has surged dramatically. Yesterday's uptick was 10 percentage points at 13.17. It is still below 200-day moving average, but the India VIX hit its highest since 10th of September. So you must understand as to how this volatility and churn is now impacting valuations. Remember, the Nifty, before this sell-off started, by September 30th, which is the 9th month performance in the calendar year of 2024, was up 21%. Other indices such as the mid cap select, the small cap index, The mid-cap index, I'll tell you that data. You will be surprised to know the 1 year performance. Okay, let me give you the year-to-date performance of top winners. The CPSE index of public sector enterprises, these PSUs which have been lying quiet over the last 2-3 months or so, is still up 45% in year to date. The auto index is up 41%. The mid cap index is up 27%. The metals index is up 20%. Pharma index is up 37%. Oil and gas index is up 32%. So this is the kind of rally that we have seen over the last 9 odd months or so, and this is what is getting absorbed. Mayuresh Das, good morning to you, Mayuresh, and best wishes for Navratra and the festivities. Bulls haven't been having a great time since Navratri has started, and the sell-off over the last 4 days seems to be accelerating. How are you seeking or understanding sentiment on Dalal Street?
Morning, Shail sir. Happy Navratri to you as well, and all the viewers who are seeing this. 2-3 elements. One, in terms of global cues, when it comes to macro data points, US data points which are coming through are relatively stable. So to that extent, I think the fear of the market of US having a hard landing probably seems unwarranted at this point of time. Second, the Japanese Prime Minister, the new Prime Minister who has come in, who's considered to be a hawk. The street was a little bit perturbed because of the yen carry, which can resume again. But I think his statements have been pretty encouraging so far. He's saying that he's going to take it very, very easy, and that rates might not get hardened in an immediate time period as well. The third element, obviously, I think European data points as well, looking far more stable as far as inflation and core inflation is concerned. And that is giving respite to the markets that growth will come through, and interest rate cuts across the globe, as the Fed has started doing this, will also give support to that growth. The second point, sir, is now earnings. How will earnings play out? Our interaction with the US research team suggests that US earnings might be soft for this quarter. Similarly, in the Indian context, our earnings might be soft as well. The good point about our earnings is, with a better monsoon, rural discretionary sectors will show a good comeback in the second half, and therefore earnings should start showing stability in the second half and a strong recovery a year after that. The third element, obviously, is the China stimulus. And yes, Chinese equities were under-owned. Not many FIs that participated over the last few quarters and years. But with the stimulus, the hope is, as macro data points start improving, there might be some element of FI flows towards China. But again, domestic liquidity counters FI liquidity to a large extent. And therefore, I think with the kind of liquidity that a lot of our institutions are sitting on, any decline that comes through the market, I think that will be bought into. And the fourth and the most important point, geopolitics. How this probably escalates in the Middle East is anybody's guess. But if this escalates into a full blown out war, obviously I think you will see the Red Sea crisis come up. I saw apparently some photographs, somebody had put on this on Twitter that Singapore, there are a lot of ships which are built up already. So I think how this evolves might have a large say in terms of global trade. So yeah, volatility might continue for markets, but any decline will become any big decline will become a good buying opportunity for Indian markets.
Yes, I understand that, Mayuresh, and see, nobody gets worried about a correction, and God knows, while we've been enjoying a fabulous uptick. I just mentioned a lot of indices alone rising between 20 and 35% year to date in 9 months. You know, I have never seen it. I must confess this. So therefore, it was, the markets were primed to fall. Yeah. Every single weekend, I have to travel to events where people discuss stocks as if they are going out of fashion. These are all signs of market being at a peak. Everybody wants to talk Nobody wants to hear what the market is saying, and the market has made it loud and clear that you have to hear what I am telling you. We may not calculate the PE or the price to book or the extensive valuations, ladies and gentlemen, but the market always does. It is supremely intelligent than all of us put together can ever hope to be, and one must understand what is trying to communicate. It is the pace of the fall, Mayuresh, which is bothering. See, 500 points taken off on a single day. Look at the FIS sell number, 15,000, 5,000 and 9,000. Last 4 days, 32,000 crores have been taken out. So, people want to also book out very quickly. That's the message that the market is sending.
Oh, absolutely, very valid point that you have put forth, Shail sir. And as I mentioned, I think whether this FI money which is moving out is short money, hot money, hedge fund money, I think we'll come to know in hindsight. But there are apparent reasons as well, right? As I said, and as I mentioned, that earnings will be soft. You're not going to see a great earnings uptick. We've seen 2 years of fabulous earnings growth happen for the markets, and they've grown with the market growth as well. But to expect earnings to compound at the same pace, it is going to take a breather for the next couple of quarters at least. There will be some element of revival in the second half, and next year will again be relatively better as far as earnings is concerned, because earnings is where the base for the market ultimately lies out to be. The other point also is the kind of IPOs coming in, and you're absolutely right. I think there is exuberance in the market. You've seen that in terms of how percentage of bank holdings and the deposits shifting towards mutual fund investments, tier 2, tier 3 towns, also doing those SIPs away from the traditional savings instruments into mutual funds. And a large part, Shelter, is that in the last 2 to 3 years, nobody's seen a meaningful correction in the market. Now, if a correction does come through, how will these people react? I think that is going to be very interesting to see whether they put more money in the correction that comes in and average their impact cost as far as their long-term holding is concerned, is to be seen. But yes, exuberance had built up in a few sectors. And yes, as the profit booking is happening in the Indian markets and the FI diversion is happening towards China with the stimulus that has got announced, as I mentioned, the next few weeks and months might be very, very volatile. And let's not forget, there are state elections that India has to comprehend with, and the US presidential election, which is also very, very tight at this stage.
Yes, absolutely. So, ladies and gentlemen, a month of October is likely to be painful. This froth that Mayuresh and I have been talking about will also take into account the 4 state elections that are impending. Remember, JK just finished. Haryana goes to polls fairly soon. Maharashtra has its election pot boiling. Jharkhand also goes to polls. And from what are indications that the ruling party at the center is on a back foot there as well. So all those things have now suddenly come together and created this dark cloud over at least stock prices, and valuations have corrected. Mayuresh, where do you see value? Let's not talk in terms of prices, but what are the stocks or sectors that you have on your radar? You may not buy today, but you are looking at them with a डिलिशियस फीलिंग कि 10 दिन पहले तो ये हाथ में ही नहीं आ रहा था, अब तो ऐसा लग रहा है कि मेरे गोद में आके गिर जाएगा.
So I think domestic cyclicals will still continue doing well, Shelter, in the backdrop of what we are discussing.
Yes.
Infra, selective capital goods have corrected, and if there is certain more correction happening, let's understand the kind of capex that the government is putting through, the order wins and the order books that keep on burgeoning for the sector. So I think if I have to divide that, power as a sector becomes a clear-cut sector which has a lot of tailwinds towards it. You've probably got certain sectors like cement within the infra segment, where I think numbers should now start improving going forward as well. You've seen consolidation for the industry, demand remains extremely strong, and therefore this sector might continue doing well as a proxy to the entire infra story. Waste and water management, Shelter. Let's not forget that there has been a large chunk of allocation happening towards the center. A lot of global changes happening towards environmental control as well. If you really got a long-term view, I think certain stocks within these sectors, if they do correct, seem to be a good thematic proposition going forward. And last but not the least, let's not forget banks. Yes, they are going through a pain of deposit mobilization, but I'm pretty sure they will adjust in terms of how do they adjust their asset liability book. The street also will try to adjust futuristic earnings if this trend probably continues. Are NIMs going to get compressed? If yes, to what extent? And if the growth starts coming back, do they compensate for the fall or compression that you probably see in NIMs as well? But certain PSU banks, certain private sector banks, if there is a correction, there might be a value proposition there as well.
Right. Mayuresh, I'll very gently request you to isolate a couple of names in domestic cyclicals, industrials, cement in particular. And let me just address the pre-open trade in a while. So 123 points downtick on the Nifty. Ladies and gentlemen, we are staring at the 50-day EMA now, around 25,050. Now we are at about 25,086. Now what are the stocks that are in pain? Okay, TCS 31 points lower, 4,200. Infosys 1.5 percentage points lower, 1870. Let's look at the two big boys where you saw a huge amount of selling. HDFC Bank 35 rupees lower, 2% down, 1647. Reliance is flat, thankfully, but ICICI Bank, this is the second heaviest weighted counter on the Nifty now, 32 rupees down, 1224. What is in the green? L&T, because it corrected very, very sharply yesterday, around 200 DMA, probably a dead cat bounce, but in the green. Tata Motors, equally sharp sell-off yesterday and over the last 15 days or so, up 10 rupees. Whether this will continue, only time will tell, but it's not looking good for the Nifty now. Straight away, it's now at 25,074, which like I have pointed out is exactly the 50-day moving average. What will hold? Let us see, but this gap down is serious because normally selling accelerates after a gap down. We will only see what will happen at 9:30. Okay, very quickly into the top gaining list on the NSE 500. Is there a stock that I would like to mention? Maybe PNB Housing, 1% higher, 949. Maybe Sumitomo Chemicals, 1.1% higher, 544. What we'll do, ladies and gentlemen, is we'll utilize Mayuresh's genius in picking stocks and leave the market to its pre-open moves. They'll settle by 9-7 and then we'll come back. Mayuresh, I just very gently wanted to know if you could name a couple of thoughts in terms of companies and stock prices from the sectors that you just enumerated may do well.
Absolutely. So I think within cement, our take has been very clear, Shail sir. I think go for leaders and leadership stocks because these are the stocks who can take control of their balance sheet in good times and bad times as well. So I think Ultratech, as an example from the large cap names, is looking attractively placed. They are consolidating the expectations in terms of reasonable volume growth along with reasonable realizations. Should support their prices, should support their earning growth as well. And therefore, Ultratech is something to watch out for. Within the mid-cap cement pack, JK Cement, again, I think has been a long-term favorite. So if it consolidates and creates a good base, the EPS, RS ratings for both these stocks are extremely strong. JK has an added component and element of white cement where realizations are far, far better than grey. And they're again consolidating their operations to a large extent. Within banks, if State Bank of India consolidates at lower levels, I think valuations are not too expensive. If it corrects and consolidates and forms a base at the lower level, it has got strong earnings growth. Obviously, I think earnings will calibrate, as I said, for the sector as a whole, assuming the headwinds that the sector is facing But again, I think valuations in their favor, and the bank probably looks attractively placed in terms of a long-term trajectory as far as the growth dynamics are concerned. Larsen and
Hmm.
Toubro, I think it's a mix of everything, right? I mean, nothing much to say about that. But again, I think it's a behemoth which probably remains as a proxy to the Indian economy. Hydrocarbons, getting into new energy, defense, and their overseas operations
Absolutely.
also support. So I think go for leadership stocks and corrections.
Fair point. I think this has been a wonderful elaboration of what to look forward to, and we will obviously pay a lot of attention to these stocks. L&T 200 DMA at a time when India is building out her biggest ever infrastructural push on airports, on roads, on ports, on everything that can improve the GDP. Let me just find out what was the most recent high on L&T, and that was somewhere like 3925, and we are now at 3500. Let's hope this 200 DMA holds, but you know how the correction is at the moment. Mayuresh, one thing that I have also noticed is that a lot of stocks are now going below the June 4th lows. That was a seminal event in the markets, which was the reaction to the adverse election outcome by the market. What do you think is the market trying to communicate? Reliance, as I have said, is below June 5 lows.
So I think one also has to understand, with all the factors that we are talking about, macros and micros will have an impact, and that impact might be short-term in nature, because in the last 3 years, we have hardly seen a correction of more than 5%, and the markets have gestated all events into its stride. We've seen three wars happen, we've seen elections happen, and everything under the sun that could get thrown at the market. So I think liquidity has supported the markets to a large extent. Liquidity is still supporting the market. So I think if any of the conditions go probably a little bit southwards, which means earnings deaccelerate to a large extent, which the markets are not believing in, and continue doing so for a couple of quarters continuously, or there are global events with a combination and a cocktail of geopolitics, which probably creates a scenario where the markets believe that earnings might no longer be sustainable, even at the global scale, along with demand slackening off substantially and falling off the cliff. Then you probably got a sell-off on your hands, with the markets, as you rightly pointed out, sir, will itself point out to us. However, I think individually, what has happened with Singapore GRMs will have a huge effect in terms of RIL's numbers, specifically when it comes to upstream operations, as well as their petchem business, because downstream product pricing will probably get affected. The retail businesses might hold up, but I think it will not be good enough to compensate for the 40% of EBIT contribution that the other businesses probably do. So the street is expecting some softness with the kind of global cues and macro data points that are playing out at this juncture. But what we've historically seen, again, in the past, Shail sir, specifically in the Indian context, is that elections, the markets might react if it doesn't go in favor of that. But then I think it comes back to sanity, because reforms, processes that have been set up, it's very difficult to reverse that, specifically at the center. State politics is a different ballgame altogether, and the markets might probably take that interest.
Okay, that's a wonderful view that is coming in. 909, Mayuresh, just a little bit of time, if you will allow me to just mark stocks. So it's a modest 68-point downtick on the Nifty at 25,181. Remember, the intraday push has been towards the 50-day moving average. Whether that will come or not, only time will tell, but bears are testing that, hitting it from the top to see whether it can be broken or not. Which are the stocks that are contributing to the maximum pain? Okay, I just want to see HDFC Bank down 7.5, ICICI Bank down 9.5. How about Reliance? Just a moment, please. Reliance is down 6 rupees. Bajaj Finance is down 13. Remember the basket sale yesterday from FIs to the net level of about 15,000 crores was primarily in Reliance, in Tata Motors, and in HDFC Bank. So these are the three stocks that need to be watched. Mayuresh, coming back to you, where do you think this profit booking that is happening so sharply will move into in terms of sector rotations? Do you see PSUs coming back, or am I just hoping against hope?
I think that's so. But again, I think you're right. I think if you look at the defense stocks as an example, and you've seen a massive correction that has probably happened. But in a market like this, typically when there is a lot of uncertainty happening, at least from a short-term perspective, and the market tends to be typically defensive, Shail sir. So I think yes, over the past few weeks and months, we have seen ownership increase in pharmaceuticals, in FMCG stocks, selective IT stocks as well. But I think the markets might say that till there is some element of clarity that happens over the next few weeks or the next couple of months, let us hide into these defensive spaces because at least these spaces are spaces where earnings deterioration might not fall off the cliff. So yeah, I think there might be some element of defensive rotation happening in FMCG, a little bit of pharma, a little bit of.
Okay. Fair point, and I think PSUs have really had a great 18 odd months. They've been sort of languishing around for the last 3 months. Nothing much to complain about. And this is the time when actual stock pickers come in. Remember, we haven't spoken about defense at all, and that's how the markets work. When all eyes are away, that is when a true stock picker comes out and says कि भाई अब 30-35% स्टॉक करेक्ट कर चुका है, अब मेरी बारी है. आप लोग ने बहुत फ्रॉथ कर लिया, बहुत मज़े लूट लिए, अब let the big whales come in. Remember, whales don't you don't see a whale on the surface of an ocean. It's very rare. The whale always hunts deep down in the ocean, and the allegory in the market is that once stock prices correct sharply, at least quality ones, those are the times when big whales like Mayuresh step in and say कि भाई चलो अब हमारी बारी कुछ समय पहले आपकी थी. But Bikaji Foods, Mayuresh, yesterday we had a common friend over in Delhi, and we were discussing Bikaji Foods over bhujia, and of course the required accoutrements around bhujia as well. 919, of course record high was I think 980,000 something. Look at how it has not corrected, is my point that I'm trying to say. That some parts of the market are not slipping as much as others are. So is this a level that you would step in?
So as a disclaimer, sir, a couple of days back we did book out of Bikaji because I think the valuations have run a little bit too much ahead of themselves. But if it does correct, yes, it will present an opportunity.
Okay.
Certain large mid caps also, if they do correct, will give opportunity, Shail sir, in our opinion. So I think we are having a very, very close look at the largish mid cap universe because if they correct and make a good base, we have started creating a watch list. We might probably start entering.
Okay, fair point. 914. Mayuresh, one stock very quickly in the mid cap space where you find value before markets start to tick.
I think Jyoti Labs looks interesting if it corrects. Cables, if it corrects, looks interesting. So I think these couple of names in the largest mid caps is where our sites are.
Okay. Okay, ladies and gentlemen, we begin a tough day. There is green and it's good. The Nifty IT index is 60 points higher. The Nifty Bank, which lost 1,000 points, is up 25 points. Nifty is 10 points higher. The Nifty 500 is 3 points higher. Is this a dead cat bounce? Only time will tell. Is this a bounce which will be used by bears to go short again? Only time will tell. But nevertheless, let us enjoy this while it lasts. Okay, the top three. HDFC Bank 30 paise lower. ICICI Bank 4 rupees lower. Reliance in the green. This is good. 11.5 rupees higher, 28.25. Out of 10 index super heavyweights, 6 of them are in the green. This is a positive start. TCS 28 rupees higher, 42.61. Infosys 9 rupees higher, 19.01. You have L&T bouncing from 200 DMA, 11 rupees higher. Tata Motors, after a debacle over the last 4 or 5 days, is now inching up 4.5 rupees higher. Remember, you are not to buy the falling knife. Let the market consolidate. An equally sharp fallback normally results in a spike, but that spike is often sold into, and that is what has happened. Nifty is down 36 points. Bank Nifty is down 89 points. These were the shorts that were covered in the first 1 or 2 seconds, which were put into place in yesterday's trade. Okay, let's go to the most active list which is there. Okay, top 4 most traded counters are in the red. HDFC Bank, Reliance, ICICI Bank, Bajaj Finance. We have the Bombay Stock Exchange 1% higher. Mayuresh, this is a conundrum that only you can explain. SEBI coming out with a guideline reducing the number of monthly expiries, increasing lot sizes, improving upon margins, and yet here is Bombay Stock Exchange now consolidating above the 4,000 mark. How do you explain this?
So I think 2 angles, as I've heard from market participants that I speak to as well. One, I think the impending NSE listing and the valuations that are there in the grey market for NSE listing are substantially higher. So if you start discounting that to BSE, I think there is the value that you're seeing is a base case valuation that a lot of guys on the street are coming at. Second, with 1 expiry per exchange and the rules that have probably come through, BSE is also incrementally going to benefit because there is going to be a lot of activity as that expiry happens on 1 exchange, as a large part of the volumes on expiry driven days were driven by NSE. Obviously, with the kind of increase in contract sizes that have happened, volumes might fall off, and that's what expectation is of around 20%, which means that the trading incomes might also fall out as far as platform fees and exchange fees are concerned. But Shail sir, 2 चीज होती है, which is the second point. Indian investor बहुत savvy है और Indian retail investor adaptable है. तो कहीं ना कहीं I think we will find out ways and means in terms of participation that the retail investor has, either through options or otherwise. And let's see how this probably moves out. So to a certain extent, annuity fees, IPOs, and a large part will still continue. But I think these 2 elements are something which is probably driving value. So BSE le lo, CDSL le lo, I think people still are assuming on the street that there is value compared to its counter.
Okay, Mitesh Panchal joins us. Good morning to you, Mitesh. A very warm welcome. Festivities all around except on Dalal Street. How are you reading sentiment here?
Good morning, Shailji. Good morning, Mayuresh bhai. Sir, festivity is here. Who says festivity is not there on the Dalal Street? We all are waiting for the correction, and correction is here. So it's a time to buy. Before you buy crackers, before you buy sweets, let us buy something which will help us to enjoy in the first quarter of the calendar year from January to March 2025, because if we buy the dip right now, probably we can enjoy the fruits in the first quarter of the calendar year 2025. So as per my opinion, I think before I go and buy any clothes or before I go and buy any crackers or mithai, I would like to buy anything and everything, right from PSU to the large cap to everything. So with a God grace, yeah, in the Navratri, we get the right time because people use Navratri to buy 2-wheelers and 4-wheelers. I think for us and for our investors, this is a great buying opportunity.
Okay, ladies and gentlemen, you have a guy who's now sticking his neck out and saying this is a buy opportunity. Mitesh, before we get into how prices are moving, very quickly, 2 stocks that you would think merit an investment via a SIP for probably the next 6 months. What do you suggest?
Okay, very interesting question. Sanji, see, I have observed over the last few years that whenever a correction like this comes in, all you need to do is you need to stick to the quality. So the two stocks which I will buy in the form of an SIP or a lump sum is first a big boy Reliance, very attractive technical level at around 2800, 2900, and HDFC Bank. So these are the two stocks where I will do SIP as well as a lump sum as of now.
Okay, so these are the ones that you mentioned. How about Shree Cement and Tata Motors? Tata Motors in particular seems to have corrected from say 1100 to all the way down to 920. Is this a dip that you would like to purchase?
See, in case of Tata Motor, I do not want to buy the dip. Let the trend gets confirmed, and I think that confirmation level comes above 955. So I'm not in a hurry to buy right now. Probably might get an interesting level on the downside, probably at between 885 or 900. If not, then I will buy above 955 only, because that is the attractive level from where the rally will start. As far as Shree Cement is concerned, yeah, within the entire cement bank, I think this is one of the stock which needs to be bought into, because technically we have also released a report before a few days wherein we have said that these are the levels which are attractive. The stock is available below that level. So yes, Shree Cement definitely at the current level I will buy, but for Tata Motors will wait either between 885 to 900 or above 990, 955.
Okay, 922, ladies and gentlemen. Let's just try and flesh out what is happening in the market. Because we are optimists, we look at stocks that are in the color of green and doing pretty well. Any name that I would like to add on air? Well, I'll keep myself a little away. So in the list of top 30 stocks in terms of top traded volumes, ladies and gentlemen, there is just one which is in the green, and that's from the cement pack. ITD Cementation, 2.7% higher. This is a move that has been in the making. Yesterday was a blowout. Let me just get Mitesh's view first on ITD Cementation, then I'll request Mayuresh to join in as well. Mitesh, is this something that you will chase already at a record high?
Yeah, so Sharji, if you look at the chart pattern, yesterday the stock closed at close to an upper circuit of 645.35 was the high. Stock closed at 643.55. And if you look at prior to that, I mean, from 23rd of September till 23rd of September till 1st of October, stock had a lower top, lower bottom formation on a daily chart, and suddenly with the volume yesterday, the stock has spiked up. So I will not chase the stock. Rather, if I have bought at the lower level, will definitely book the profit and get out of this counter, because at this point of time, from the risk reward viewpoint, other counters within the same space is available at an attractive price.
Okay, Mitesh, a quick one from you. ITD Cementation, chasing a record high, or should we stay away?
No, so I think anybody holding on Shail sir should hold on. Obviously, you have to have your risk parameters in place, but the order book is fabulous. The expectation in terms of what they have been executing has been extremely, extremely good as well. The only concern is, again, too much of price action. I think 20% circuit on the news yesterday was not warranted, but yeah, I think the markets are taking any bit of news into stride. But yes, superb order book and execution has been very good.
Yes. Okay, now the slip comes. Nifty is down 100 points, and we are just in the 9th minute of trade. 25,139. Bank Nifty has slipped as well. 155 lower, 51,680. Remember, ladies and gentlemen, there is no greatness involved in buying a falling knife. The space of sell-off that is there on the screen is sort of phenomenal. Let's look at the advanced decline ratio. 580 stocks in the green, 1600 in the red. So easily 1:3 favoring bears, which means that for every one stock that is in the green, 3 are in the red. We tracked 19 indices for you. 18 are in the red, only one is in the green, which is the IT index, which is also showing signs of coming off from its day's high. The top losing index is the realty space, which was rising very sharply because of the potential cut in interest rates. Let me just give you an idea how realty is doing. Okay, it is down 2% as an index, but remember, over the last 1 year the index is up, still up 78%. Over the last 9 months the index is still up 30%. So there is lot of froth that is there in prices, but that is how it is in Indian markets. Let's look at top traded again. No, there is just the sell-off right there in front of me. Not a single gainer that I see in the top 30-35 stocks. Any circuits that I would like to mark? No, I will not mention these stocks on air because there is okay, not really, we'll just keep it away. Mitesh, anything that catches your fancy in today's opening? Mayuresh ji, anything that catches your fancy in today's opening?
Oh, sorry. I thought आपने मितेश भाई को पूछा. Sorry for that. नहीं, I think we will wait and watch. जैसे मैंने कहा, Shail sir, I think थोड़ा बाजार को consolidate होने की जल्दबाजी की जरूरत नहीं है. You don't need to rush into the market, and you never know what happens over the weekend, right? Till what end? I mean, escalation क्या होता है Middle East में पता नहीं है. It's a weekend as well, so just take it easy. I think just watch the screen today. I think that's the best part that you can.
Okay. So I agree with you, and the weather, Mayuresh, here is phenomenal. It's hard to take you away from the Navratri festivities in Mumbai and Maharashtra and Gujarat because they are far better here in Delhi, but I can assure you, great weather, great company, lots of Bikaji food stuff, and of course a lot of stuff that goes around with Bikaji foods. Spend the weekend here. We will discuss a lot of interesting things. Mitesh Bhai is back on his hot seat. Mitesh Bhai, any price that looks good? I would like to take your opinion on Oil India and ONGC. Remember, rising crude oil prices are extremely beneficial for these two companies, and they have corrected very sharply when crude oil prices were dipping. Oil India up 2.6% today, and ONGC in the green as well. Mitesh ji.
Yeah, so as far as two stocks are concerned, I think one which you have picked up from my basket is ONGC, which I like the most right now. See, the beautiful part about a technical analyst like us is that you can take trade in any given market, whether a long or short, provided that if you follow the stop loss discipline. So over here, definitely would like to go long with ONGC with a stop of 290. The stock is trading at 298. For the potential target of 320, 330. Second stocks which I like the most from the current basket is Bank of Baroda at 248. I think technically looks very promising. So with a stop of 240, you can go long in Bank of Baroda.
Yes.
For the potential target of 260, 265.
Okay, ladies and gentlemen, this is an interesting thought that Mitesh injects into the conversation. Bank of Baroda. For the technically oriented, it's around 200 DMA. But to you, Mayuresh, one of the finest money-making franchisees over the last 2 odd months, over the last 2 odd years has been Bank of Baroda. You and I have discussed this counter right from sub 100 rupee levels all the way up to 300. So people made 2x returns, and now it has sort of come off from 300 to 245. What are the valuations telling you? The stock has done nothing since the last 5 months.
Very attractive, and in fact I'll add one more to this, Bank of Maharashtra as well. So if you probably look at both these stocks, there is sufficient amount of value in them. Capital adequacy ratios remain extremely strong. if you look at the provisioning that both these banks have done, I think a large part of
Yes.
PSUs have done that, but both these banks have done excessive provisioning on their balance sheet. So what will really happen, Shelter, is as they start doing recoveries, and both these managements are very, very focused in terms of their recoveries as well, that directly adds down to their bottom line. Second, deposit mobilization is a big issue for the banks. But if you look at their legacy base that they are probably carrying, and their long tenure holders who have stuck with the bank for decades, you are going to see reasonable deposit growth happening with both these franchisees compared to the private counterparts. So the stickiness of their customer base will ensure deposit growth remains stable, and that is what is critical in times like these. So if they do correct both of them, they form a good base at lower levels. I think both these banks probably are attractively placed from a valuation perspective, and business dynamics should be relatively more stable compared to the rest of the bank.
Okay, this is a data point that I want to mention for people who are oriented towards the fundamental part of the market. Look at the 3-year price earnings median for Bank of Baroda. It is at 11.6, and the stock itself is at a PE of 6.7. So remember, ladies and gentlemen, when you buy stocks for your portfolio, lot of things need to be looked at. What is the PE of the stock in relation to itself? What is the price earnings of a stock in relation to its sector? And of course, what is the book value? Bank of Baroda is available below book value, which is somewhere like 260. It itself is at 245, and this is a company, as Mayuresh says, has done excessive provisions, which means if NPAs are paid back, those will be added to the bottom line. And Mayuresh and Mitesh in particular has mentioned that technically it looks good. Whether it will bounce back today or tomorrow, only time will tell. But let us look at it from the point of view of injecting a SIP into the counter. At the same time, I would also like to mark the Nifty PSU banking index, which has let me just give you that level. Okay, the Nifty PSU banking index is at 66.25, down about a percentage point today, but it is up 16% year to date, and it is actually down 9% in the last 3 months. So this is, ladies and gentlemen, the margin of safety which sensible people like Mayuresh and Mitesh often point out. 933, there is a smart move coming into the IT index, and because the first 15 minutes have lapsed, it essentially means that you might see some kind of consolidation happening, because the markets have not sort of broken down on heavy selling. Remember, today is also the last day of the week. The indices are overstretched in terms of the weekly change. Let me just elaborate that for you. In terms of the Nifty, it's fallen about 3.5%. The Bank Nifty has fallen 4.5% in the last 5 trading sessions. So clearly they seem to be overstretched at that point of time on the short side. Mitesh, anything that catches your fancy?
I think the oversold trade in the entire auto pack is coming back, especially in Bajaj Auto. So at 11,900, I think Bajaj Auto can be played as just a swing trade for a day or two. So with a stop of 11,600, one can go long at 11,900 for the potential target of 12,200, 12,500. This is a swing trade, and the life of this swing trade is not more than 2 trading sessions.
Okay. Now, ladies and gentlemen, 25,200 is back with the bulls. So basically, an intraday test has happened of the 50-day EMA, which was 25,050, and from then on, you've seen a recovery happening. we'll again go back to our top 10 index heavyweights, and out of those top 10, now 5 are in the green, led by IT stocks. Infosys up 9 rupees, TCS up 28 rupees, Tata Motors, this is from the auto space that is mentioned by Mitesh, up 4 rupees. Remember that it was beaten black and blue. I would presume that it's one of the worst performers of the Nifty over the last 4 or 5 sessions. I will check that and get back to you. Coming back into reckoning is Axis Bank, and even ICICI Bank is in the green. So they are recovering from intraday's lows, and that is something which is good. Mayuresh, any views that you have in the market after the first 15-20 minutes? Is this a sensible and a mature reaction that we are seeing?
Oh, absolutely. And my own sense is that even the FIs or hot money will realize that if they keep on selling abruptly, at some point of time as the market consolidates at lower levels and buying starts coming in, they'll find it very, very difficult, say after a month when everything settles down on the global front and we come and revert back to mean in terms of kaun se bazaar achhe lag rahe, and India obviously will stand out in an immediate short to medium term perspective. Their entry will be very, very difficult back into stocks because I think domestic funds, if the market does correct, will start lapping up both large caps and largish mid caps, even selective mid and small caps as well. And therefore, they will find it very, very difficult. So they have to be very, very selective in terms of moving their funds around. They can't move their entire baskets around to China and therefore, or other markets as well. And therefore, I think it's a calibrated selling which will come through, which is being taken very, very maturely by the market. So इसलिए मैं कह रहा था थोड़ा आज सतर्क रहिए, वीकेंड पे क्या होता है देख लेते हैं. मंडे ट्यूसडे से आपके पास बाइंग अपॉर्चुनिटीज वापस आ जाएगी if the market does correct.
Yes, absolutely. Yeah. You know, I have always tracked this, Mayuresh, that all major geopolitical developments start to happen after Friday evening,
Yes.
when Wall Street has shut, and there is little carnage that you need to take care about markets. Of course, futures and all react, but
Yes.
if there is the possibility of Israel retaliating on Iran and hitting its oil facilities, ladies and gentlemen, it will happen after maybe Friday 9 p.m. or Friday, or maybe Saturday and Sunday, and then markets will have about 24 hours, 48 hours to sort of look at the impact, look at the actual on ground result, and then maybe take a call on Monday. Remember, Indian equities have corrected before the event because they know that some reaction will happen, and if that happens over the weekend, fine, we have already corrected, and then by Monday let us resume our upward climb. Mitesh, have you noticed this trend over this weekend tryst with how should I say fire?
You're absolutely bang on, sir. And I would like to add one more thing, that as far as Indian regulators are concerned, majority of the announcement will also come after Friday 3:30 only, whether it's a change of X or a Y or a Z. So yeah, weekends are absolutely important, and in such scenario which we are going through, advisable to be absolutely light throughout the weekend, and a fresh position needs to be taken. I think what you and Mayuresh sir is advocating right now is nothing but your vast experience. So I think, yes, it is advisable to go light in the weekend, and let us take a fresh view Monday morning.
Yes, Mayuresh, before we let you go, broad thoughts on the large cap space which you have so wonderfully well pointed out. Look at HDFC Bank now in the green, a rupee 90 higher, 240 higher. Let me just point out some interesting data for Mayuresh before he responds to this one. The low on HDFC Bank today was 1670. It's at 1683. Very quickly on ICICI Bank, let me just see that. Low was 1245, it's now at 1260. So these are the kind of upticks that are happening, and Reliance is doing pretty well as also. The low was 1273. We are at 2800. So very sharp jumps coming in from intraday lows. Mayuresh ji, do you think the worst is over, or are we just being too optimistic?
I think the market will take it in stride. And as I said, if there is a correction, I think it's a welcome move for these large caps. Leadership stocks will respond relatively better in the aftermath of whatever correction you probably see. And therefore, keeping these stocks on the radar makes absolute sense. The markets have already started gestating, Shail sir, that Reliance, JRM, Singapore JRM, downstream pricing, etc. And therefore, I think markets being forward-looking over the next 4 to 8 quarters will say, "Agla ek quarter, 2 quarter tough hai, but second half se recovery aa jayegi." Similarly for banks, as I mentioned in my opening remarks, maybe the next couple of quarters are tough, but I think banks are the way for India to grow as a backbone for any growth parameter that happens in the financial ecosystem. Keep a watch out for all these bears. I think over a medium term they will.
Okay. Mayuresh, again, thanks for stepping in on the spot on a difficult day like this and offering very sage advice, which is stick to large caps. And he's mentioned a couple of stocks from the frontline segment, which we have now being playing on our channel. Please keep those stocks in mind, in particular L&T, available at 200 DMA and after a massive correction. As always, Mayuresh, all the best to you for the festivities ahead. May the goddess shine on her wealth and all her wisdom upon you, your clients and everybody at home.
Thank you so much, Shail sir. All the best for Navratri to you as well. आपको भी सुख समृद्धि और धन की वर्षा हो और मितेश भाई आपको भी. Thank you so much.
Thank you, sir.
क्या बात. चलिए. Now let's get into a conversation with Mitesh. Mitesh, before you joined us, I mentioned it to our viewers that about 15 days ago, 10 days ago when you were with us, you had mentioned that you are now in observant mode because markets looked stretched, charts looked overbought, and of course there was just much too much froth. I need to understand your views on the mid cap and the small cap index. These have been the shining stars of the rally that has accelerated in 2024. What would your medium term charts of small cap and mid cap indices telling you?
Yes, sir. On that particular day, we also had discussed that I used to read books in my boardroom, and you said that yes, one day I will come to your boardroom and read the books as well. So the charts are telling us the story that we are in the initial phase of a distribution. Now the classic turnaround of sector rotation will start. So for the next 3 months, we need to be very careful about selecting a stocks from both the mid cap and the small cap arena. The reason being is this, that a classic distribution has already taken place, which our system and method has sensed before 10-15 days. And on that day, we said that we are sitting on a cash understanding the market. Now, probably the time has come selectively to open the checkbook and probably to buy something. So where we are interested right now, probably the metals is where we are interested right now. Where we are interested right now is probably the entire PSU basket with respect to banks, PSU banks only. That is where we are interested. Where we are interested in selected MNC stocks like Siemens, ABB, Honeywell is where we are interested. I think these are the 3 pockets where we are keeping our eye on. And we are deploying just 10 or 15% of the capital right now. See to it, probably in the next 3 months, the entire mid cap and small cap indices will give us a very clear view.
Okay. Mitesh, could you just narrow down a couple of names? You've mentioned ABB that I could hear, but in the MNC space, maybe a couple of names. I'll just come back to you. I want to mark a couple of stocks which are buzzing on strong volumes and green ticks. Ladies and gentlemen, Pfizer. We rarely discuss this fabulous wealth creator, a pharma MNC. which is now up 3.5%, and amongst the volume buzzers, it has traded 1.3 times the 5-day average. Look at Home First Finance, 1243, 5% higher, and 100% of volume has been done in the last 40-45 minutes of trade. And I see GE Shipping. Remember, shipping will be disrupted if this problem in the Middle East sort of accelerates, and shipping and container costs will go up. Therefore, you see this probably a move coming into shipping. And of course, I'd like to mark Mannapuram Finance, 1% higher, 193. Mitesh, coming back to you, any names that you could isolate?
Sir, from the MNC basket, we are probably looking at the 4 stock. First is ABB, second is Siemens, third is Abbott, and fourth is Honeywell. These are the 4 stocks which are on our radar, and we would like to buy all the possible dips in these 4 stocks. We are of the view that the current rally is just pausing as far as these 4 stocks are concerned, and the rally will resume sooner than later. And there are strong chances that within the next 3 to 6 months, we can get around 10 to 15% return in these 4 stocks.
Okay, now it's interesting that Mitesh, the stocks that he points out, apart from Abbott Pharma, the 3 of them are in infrastructural space. And 1 week ago, the government mandated that it would spend 9.2 lakh crore rupees in improving the transmission and distribution part of the power sector over the next 7 years till 2032. And all 3 stocks, Honeywell Automation, in particular ABB and Siemens, are the backbone of the kind of work that happens in transmission and distribution in the Indian power space. ABB and Siemens have been rank outperformers over the last 36 months, but in the last 7-8 months or so, they have fallen, and probably that is the dip that Mitesh wants to buy into. A time and price correction has happened, and the charts tell Mitesh that these stocks are at juicier levels. Sadly, Mitesh, for our viewers, the price ticket on all 4 all 4 are either in 4 digits or 5 digits. Anything that you can see in 3 digits or maybe 2 digits, 2 digits would be slightly a taller ask.
Okay. So only one stock stand out as far as 2 digit is concerned, and that is Infibeam Avenue. So if you look at the price of Infibeam Avenue, even yesterday was also, the stock was up by 6.5%. And the sales of the stock has spent a very, very, very long time in consolidation. So now I think about 32 rupees, stock is trading around 31 rupees. About 32.50, stock will witness a massive up move, and probably we may see 40-45 in the near future. So this is the stock in this kind of a market which needs to be bought into. As a disclaimer, our clients are already holding it from the lower levels, and we are keep accumulating this even at the current level with a target of 40 and 45.
Okay, this is a matching thought which was made by our friend from Cholamandalam Finance, which is Dharmesh ji. He had also picked Infibeam Avenues amongst his 5 top picks for 2024. And here is a technical check that has come in from Mitesh. The most recent high was 42. And let us see the long-term chart of Infibeam Avenues. Okay, all-time high has been 50 rupees, which was in August 2018. Now available around 32, 33. So we'll keep these 5 stocks in mind from you. I will again repeat: ABB, Siemens, Honeywell Automation from the capital goods power transmission space, Abbott India from the pharmaceutical space, and from the IT space, a mid cap or a small cap counter, depending upon how you see valuations, is Infibeam Avenues. 950, ladies and gentlemen. The Nifty is making all the effort that it can to consolidate above 25,200. It essentially means that the intraday test of the 50-day EMA is working well so far. Remember, the high for today is 25,288, which came in the first 1 second of trade because of intense covering of shorts. If the Nifty goes above 25,288, then short covering will accelerate and you just might see better days ahead as far as prices are concerned. At the moment, I see a lot of buying support coming in. The Nifty is now down just 14 points. Bank Nifty is already in the green thanks to HDFC Bank and ICICI Bank, 12 rupees higher, and the IT index is accelerating its gains, now 240 higher. Mitesh, what is your gut feel? Is the worst over or am I overreacting?
No, sir. I think for the time being, we are done with this correction. 25,000 is the floor, and I think in the beginning of the next week, we will not break below 25,000. Sooner than later, we will see indices trading near all-time high because the structure of the market is not indicating that the fall will sustain going forward. Probably today at 3:30, we may see a surprise close towards 25,400 or 25,500, or probably Monday morning. So these are the 2 days where we see the close of Nifty cash levels will be around 25,500. Let's see.
Okay. With that, ladies and gentlemen, that is the thought process of Mitesh at the moment. I have been trying over the last so many minutes to find out a record high that the system has hit in trade today. Let me mark a few of them because generally at a time when there is a crisis of confidence in the market, stocks that hit record highs point to a divergent and a positive trend in the market. Okay. ITD cementation, which both Mitesh and Mayuresh have commented upon, is at a record high. Naukri.com, okay, I missed this one, 8,238 record high. Are there any names that I would like to take on air? Well, these are many from the SME space, which I will keep quiet about. No, I'll just mention these two. Naukri.com 1.54% higher. Remember, Naukri.com or Info Edge as we know it is also the holding company of many listed stocks, and maybe that's the valuation that is coming in. A very, very quiet overachiever. Remember, I had said many stocks are hitting or falling below their June 4th highs. June 4th, Naukri was at 5,687. It is now at 8,248. Mitesh, would you want to comment on this wonderful chart that is in front of me? It rises from bottom left of the screen to top right.
Yeah, so as far as Info Edge Naukri is concerned, if you look at the chart pattern, absolutely smooth. Each of the dip has been bought into. We have seen bit of a consolidation in the last week of August and in the first week of September. That is the 3 weekly bar ending 30th of August, 6th of September, and 13th of September was a consolidation in the entire range. But then finally the stock broke out about 7,830 and we are near the all-time high. So yes, a very smooth, very interesting chart pattern. Probably in such a volatile market, the stock has not given a significant dip. This is the stock to bought into at the current level as well.
So this is, ladies and gentlemen, how you look at the sense and sensibility that charts offer. Remember stocks like Reliance, stocks like L&T, stocks like maybe HDFC Bank and all are showing signs of medium term profit booking, but here is a share which is making repeated highs on a time scale in which the broader market is correcting. So it is an opposing trend, and that opposing trend needs to reflect on your portfolio as well. Any other names that catch my fancy? We rarely get Mitesh on the show, but let me just stretch my luck and ask a couple of names. There are many stocks that are on upper circuit, but they are from the, how should I say, the SME space. I found one which is Odisha Mine, OMDC. Odisha Mining, Mitesh, again the same chart that is reflected by Naukri.com is visible in Odisha Mineral Development Corporation as well, better known as Odisha Mine. 9300 for you, up 3.8%. What are the long-term charts of Odisha Mine telling you?
Yes, so the trend is intact. On the weekly chart, if you see, since last 3 weeks, we are consolidating. For the week ended 20th of September, high was 95.50, 27, 95.35. Current week, 96.26. So I think the top formation is going on, but probably looking at the volume, I think the stock will comfortably trade above this, and probably sooner than later, we will see the stock in 5 digits. So definitely at the current level, one can go long or think of adding this stock into the portfolio only from a medium-term perspective. However, one should ensure that they follow a strict stop loss discipline of 8500, 8500.
Okay, fair point. 957. Let's now take a dip into the market again. Nifty back in the green, ladies and gentlemen. 25,273, up 25 points higher. This is a positive development. Remember, I have mentioned that the intraday high is 288. If it goes above, then we will have a nice bout of short covering and value buying coming in. Remember, today's low that has been tested is roughly 25,095, which is around 50 EMA. So from a low of 25,095, we are at 272. So that's an uptick of easily 100 points, 170 points right there in front of us. What is pulling the index higher is amongst the super index heavyweights, Infosys contributing 14 points, Maruti contributing 7 points. Remember, Mitesh mentioned that a swing trade in autos could be in the work. Axis, L&T contributing 4 points each, as also Tata Motors. What is pulling the index lower? Bajaj Finance 7 points, HDFC and ICICI Bank 5 points each, M&M and NTPC 3 and 4 points each. Mitesh, before we let you go, one quick view on Mahindra and Mahindra.
Yeah, so if you look at the chart pattern of Mahindra and Mahindra, since last 2 days we have seen a very good fall in the in the stock, and now the stock is trading at 308. It is a top loser as far as M&M. You're talking about M&M. I'm talking about M&M Finance. Sorry. So as far as Mahindra and Mahindra is concerned, I think 3100 is a floor.
Okay, both of them.
Okay. So let's talk about M&M first. So as far as M&M is concerned, I think 3090, 3100 is a floor where it will take a support as far as the weekly charts are concerned. So yes, this is the level from where a swing trade is possibly on the radar. So with a stop of 3090, one can go long at 3107 for the potential target of 3150, 380. As far as M&M Finance is concerned, I think it's a top loser of FNO today, down by 2.5%, trading at 309. 0.70, 309.90. I am of the view that the worst is over in M&M Finance. 300 is a floor sell, sir. So with a stop of 300, one can go long in M&M Finance at 309.45 for the potential target of 320, 330. So both M&M and M&M Finance is a buy at the current level.
Okay, ladies and gentlemen, I think the inherent strength of the Indian markets has kicked in. We are at an intraday high, 25,290. And not only is the index in the green, it has also taken out its most recent high that was hit in the first 1 second of trade. Will things go for the better? I would imagine so. Now look at a point of 25,373, which is the pivot level for today. Let's hope you see better positioning coming in for the index. But Mayuresh, Mitesh, thank you so much for the valuable advice that you have given in terms of quality stock picking. And we will remember these 5 stocks: ABB, Siemens, Honeywell Automation, Abbott India, and Infibeam Avenues from you. Again, the best of festivities and the best of luck to you and your team and everybody at home for the days and the weeks and the months ahead. Thank you so much for your time.
Sir, thank you so much. Best of festivity to you as well. Sir, आपकी health और wealth बहुत ही बड़े, सब टीममेट्स का भी बड़े, BTV की सभी जो कंट्रीब्यूटर्स है उसको मेरी तरफ से शुभकामनाएं सर.
आपका धन्यवाद और आभार मितेश जी. दोबारा आपसे मुलाकात की हमेशा इच्छा रहेगी और धन्यवाद आपके समय के लिए. That, ladies and gentlemen, is the first 1.5 hour of trade that we've seen. A phenomenal, how should I say, clawback from the bulls. They have, the bears have tested the 50 EMA on the Nifty. What will happen only time will tell. But with huge amount of sips and the fact that the correction has been very, very sharp, about 1100 points on the Nifty and about 2900 points on the Bank Nifty in a span of about 4 or 5 trading sessions. Maybe it's time for deep institutional pockets to start nibbling on quality counters such as L&T, which Mayuresh has highlighted. Whether this is a dead cat bounce or the beginning of a fresh uptick, only time will tell. But remain glued to Business Today television for all the best that you see in the markets ahead. Thank you for watching. There is more after this break. Remain glued. Thank you.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching our special coverage on the Silver Jubilee edition of the Business Today MDRA, India's best business school survey. It's out now, viewers, and this 25th edition that you can now access on the stands captures the far-reaching changes that have swept through the corridors of India's